Hi, everybody. I'm Jonathan Farrell,
And I'm Daniel Garcia.
and we're the two mortgage guys. Today, we want to talk about some big news as far as interest rates. Interest rates have dropped rather substantially the past couple months. And so, what we're seeing is a lot of people that were purchasing 6 months ago, we're in the high fives, or not high fives, we're in the high fours to low fives. And now we're starting to see rates go right back down to the high threes, low fours.
Yep.
And so we want to talk a little bit about what that does for our clients as far as monthly payment wise. Purchasability, that's another big thing.
Debt consolidation.
A lot of debt consolidation going on right now. So for us, I mean, we're starting to see the influx of refinances. All those people that bought in the past, they're now coming to us, and we want to talk a little bit more about that. Daniel, can you talk a little bit more about what we've seen coming up?
No, I really don't want to say anything. But just for the people here, I will say the refi boom, as some people are calling or kind of anticipating it coming, is going to be very advantageous for people who have purchased, obviously, as far back as you want, but even as recently as 6 months, a year. I was just talking to someone, 2 days ago who purchased a year ago, and he's at 5% on his rate, and most likely is going to drop at least 0.5%, if not more, just by looking at it. And it's a big advantage when you look at what that does to your payment and changes what you're able to do each month.
Right.
So to have that opportunity to just check into it doesn't cost you anything, just to even look and stay on top of where you stand financially, rather than just writing the check or having the direct deposit disappear each month.
Right.
The everyday person staying on top of their finances and knowing where they stand with their mortgage and what options are out there,
right,
is a huge piece.
And you take a look too. I mean, if you think of it, a 0.5 point on your interest rate on a $300,000-$400,000 loan, that's a couple $100 a month that you could be saving.
Could be.
So, for a lot of our clients, when they take a look at that, should I refinance? Should I not refinance? Now is definitely a good time, especially when there is that much of a decrease. Okay, so if you're at 5%, anything over 4.5%, you really should be looking at refinancing. And another thing too is, a lot of our clients, when they bought, they have PMI.
Right.
So now we have values going up. Now we have interest rates going down. There's a lot of different factors to now where you have somebody. We have somebody right now that's saving $500 a month just because he's lowering his interest rate and completely removing his PMI. That's really important. So a lot of other things that factor into that. You might have PMI right now, and maybe you want to look at removing that. We can do that as well. In addition to that, if you do have a lower interest rate, but you do have PMI, it still might even be worth taking that higher interest rate to remove the PMI. So we're starting to see a lot of different people that maybe bought FHA. Now they have the equity position to go ahead and
make
refinance, make that change.
Get that wave when you're talking $200-$300 a month in PMI.
Right.
If you have a chance to, lower that or get rid of that completely.
Right. The other thing too, so a lot of people are calling us saying, hey, I have X amount of dollars in credit card debt. I have student loans. I want to work on refinancing all of this stuff. I have an adjustable rate mortgage. We're having a lot of people right now that are calling us saying, hey, I need to consolidate X amount of debt.
Yep.
And I know that I have the equity in my home. Is it worth it for me to do that? Yeah. You want to go ahead and talk a little bit about that?
Yeah, I mean, exactly as you were kind of leading into, it's if you're maybe a little further into your mortgage, and as you mentioned, with home prices still going up despite interest rates and what they're doing, like prices are going up. So people have more equity in their home, or if they've been in a little longer, they've acquired, maybe they have a new car, they have the car payment. A couple credit cards have gotten up to where they have a payment that they're not able to take care of each month. The opportunity to use some of that equity and do that cash out refi to effectively wipe out that payment and roll it into your mortgage to, limit your monthly payment is huge. When you look at, okay, I have a credit card that has 15% interest. I have, a car payment that's $500 a month. I have these things, and you total it up on top of your mortgage, and you're paying, now you're paying $3,000-$4,000 a month on these payments, and interest rate is, variable between each of them. If you can effectively pay all those extra debts off through your mortgage, and your mortgage payment only goes up maybe $100 a month, regardless of interest rate, as much as we just talked about interest rate, even if with that it may not it's going to be advantageous. Now you save, $900 a month in payments.
It's going to be way worth
in
it
your
for
mortgage,
you to do that.
and you have an extra $900 there that if you wanted, now you can keep all of it as just extra money, or now you throw an extra $400 a month or something, or so at your mortgage, because you're still paying the same, maybe just a hair more than you were, so you're used to the mortgage payment. Now you have an extra $900
that you could throw either towards the mortgage,
half of it
put in savings.
half of it for fun or towards savings, half of it towards the mortgage. Now you're going to save 5-10 years off your mortgage and savings and interest.
Right.
And you only have one payment to worry about each month rather than 3 or 4 or 5.
Kind of a no-brainer there, too. I mean, going back to our conversation with Derek, financial advisor, too, you can even talk with the financial advisor about how that might be beneficial to you.
Definitely.
Put that money into maybe a Roth IRA, put that into money market savings. So that way now you have other investments that you can kind of apply that to.
Right.
I kind of think that's important. A lot of people, we look at educating. I know we talk a lot about educating people, educating clients. That's something that a lot of people don't think about. They think, okay, it's not going to be worth it because my monthly payment's only going to go down X amount of dollars.
Right.
Well, then maybe you take a look at eliminating all of your monthly payments or a large portion of the monthly payments, and now you can apply that towards savings, towards other things too. So again, it's really important. I think that a lot of people get educated, and that's our goal. We want to educate as much as possible, especially right now with rates the way that they are. The Fed has announced a lot of opportunity. The Fed has announced, they have a couple of new announcements that are going to come up that should hopefully impact our market in a positive way. We don't have the crystal ball, but we wouldn't be doing this.
I do have
a
crystal ball, but it doesn't
do
work.
anything. Yeah. So again, if you're in the market to refinance, if you want to talk about discussing some options, we ask that you would give us a call. We'd be more than happy to help and go over any options that you have.
And our goal is, a lot of people think, oh, you just handle the mortgage. You just handle if I want to talk about refinance. But our goal really is to be part of your financial team. If anything, be the quarterback of your financial team. So if you have that financial advisor, if you have, that your tax guy, you have other people that are helping you with these things, we want to be there and kind of spearhead that effort and that team for you. So give us a call, or we'll call you and have that financial meeting, that financial
talk, education. We'll do the boot camp.
There you go. and kind of walk you through some options that you might not know of, or might want some more clarification. So don't feel like if it has to be just mortgage related to give us a call.
Right. Absolutely. Thank you guys. Appreciate it. Thanks
you.
for tuning in this week, this month, this day, and looking forward to hearing from you all.
See you next time.